Hello, in this video we'll talk about what to trade and how to choose the best trading vehicle. There are many trading instruments out there: mutual funds, stocks, ETF, futures, options. There are many vehicles but little time. So the real question is, what is the best financial instrument for trading? And to answer the question, let me offer you this analogy. Say your goal is to cross the globe as soon as possible. What transportation vehicle would you choose? Is it going to be Yugo or Camry or Cadillac or maybe a jet? And obviously most people would choose jet unless they want to use Yugo as a flotation device. When it comes to financial instruments, I would compare mutual funds to Yugo, stocks to Camry, ETF to Cadillac, futures to a jet, and option to a helicopter. Now you may ask, what's wrong with mutual funds? Two reasons: it's poor performance and fees. Especially bad are fees. For example, they have monthly management, administrative, and distribution fees averaging over 1% per year. Then they have sales loads, which are commission charge when you buy or sell shares, and there are tons of undisclosed fees that also mutual funds use. To learn more about mutual fund fees, I would refer you to the book called The Great Mutual Fund Trap. So, about penny stocks, they're even worse than mutual funds because they're very risky. They can be very easily manipulated, and they're also illiquid. Illiquid means once you buy it, there's nobody else to buy it from you, so you can't unload to anybody else and you end up holding it back. When you buy penny stocks, you can easily become a victim of pump and dump scheme, which is a sneaky tactic of hyping a stock while secretly selling it. And the most famous pump and dump tactician was Tokyo Joe, aka Tokomax, aka Paku Matsudai, born Yunsuno Park. And this Mr. Park, he was an owner of internet investing site that was one of the hottest sources of stock picks on the web. So in 2001, he settled case with Securities and Exchange Commission, and he agreed to pay $754,000 to settle the case. Individual stocks in general seems to be a bad choice for trading because they carry with them individual company risk. And unlike stock indexes, individual stock can go to zero. Remember Enron, MCI, Global Crossing, or Lehman Brothers, and many smaller companies. For those who want to avoid individual company risk, a better choice seems to be ETF, so-called ETF, which is abbreviation for exchange-traded funds, which are basically a basket of stocks that trades like a stock. So we have, for example, energy ETF, oil ETF, and technology ETF, which have each sector that have their own index, their own ETF. And index is safer in general and better than individual stocks because it's manipulation-free, liquid, diversified, and noticeably easier to trade in terms of smoother trend moves. But still, it's not the best choice. I compare it to a Cadillac, big but expensive. Expensive because you have to put up lots of your own capital to trade these ETF. My favorite instrument to trade is futures because they combine the lowest monetary risk plus highest percentage return. Now, what are futures? It's a financial instrument that moves in line with underlying security or commodity. For example, if the price of corn is up, corn futures are up. If stock futures is up, then stock index futures is up as well. Here's some of the advantages of futures. You can trade anything: corn, gold, oil, stock market indices, currencies, even weather. Also, they have tremendous potential, and they are regulated by the Chicago Mercantile Exchange, and they're impossible to manipulate. They have big movements and volatility and cheap commissions. So what not to like? Perfect trading vehicle. Now, right now, my favorite futures are S&P 500 E-minis, Russell 2000, and gold and oil. And here's the volatility comparison for these instruments. Volatility here represents daily fluctuations in terms of monetary value. My research team at marketprofessor.com constantly monitor different futures markets, and if we see some good tradable patterns in new markets, we immediately notify our subscribers about these new opportunities. So to check up what's hot, check marketprofessor.com website, and good luck in your trading.